All right, let's get into it. Today, we've got a real showdown in the auto world. We're pitting three titans against each other. Copart, the undisputed king of salvage auctions, CarMax, the massive used car retailer, and the new heavyweight on the block, RB Global. Now, these companies are all leaders for sure, but they operate on completely different playbooks.
So you've got three giants, each dominating its own corner of the market. But the big question is, which one is really built to win? Which one has the most solid business model, the best financials, and the clearest road ahead? We're going to break down what these deep dive reports have to say and figure out which company's profile looks the most durable.
So, here's how we're going to tackle this. First up, we'll look at their core business models and what protects them from competition, their moats. Then, we'll dive into the leadership teams and the health of their finances. After that, we'll weigh their future growth opportunities against the biggest risks they face before we land on a final verdict. Okay, let's meet the contenders. First, you've got Copart, the lean, mean online salvage auction machine with what the reports call a wide moat. Then there's CarMax, the retail heavyweight. Its power comes from its sheer size and well-known brand. And finally, the newcomer, RB Global, which got huge through a recent merger, but its moat is a bit narrower and still has a lot to prove.
All right, bell rings for round one, business models and competitive moats. This is all about the bedrock of each company. How do they actually make their money? And how hard is it for someone else to come in and steal their lunch?
So right away, you see this huge difference in how they're built. Copart is what we call asset light. Think about it. They don't actually own any of the millions of wrecked cars they sell. They're just the platform, the marketplace, and they take a cut. That means every new car they list is almost pure profit. Now look at CarMax. It's the complete opposite. They're asset heavy. They have to own every single car on their lot. That's a ton of money tied up in inventory, which means huge costs and, you guessed it, razor-thin margins.
And RB Global? Well, it uses a similar asset-light auction model, a lot like Copart. But here's the kicker. After a massive merger, it's now playing in two totally different sandboxes, heavy equipment and auto salvage. Now that gives them incredible scale, but it also creates this huge challenge of trying to manage two very different businesses at the same time. So how well are these businesses defended? Well, the reports highlight something really important for Copart, a wide moat rating from Morningstar. And this isn't just because they're big, it's about network effects. The more buyers they have, and we're talking over 1 million globally, the more sellers like the big insurance companies want to list with them. And that just brings in even more buyers. It's a powerful loop that's incredibly tough for anyone else to replicate.
So when you line them up, it's pretty clear. CarMax's moat is built on its brand name and physical stores, which, let's face it, is getting easier for online competitors to challenge. RB Global has scale, sure, but its network is split and just isn't as dominant in auto salvage as Copart's. So for its super efficient model and its nearly untouchable moat, round one goes decisively to Copart.
Okay, so Copart takes round one. But, a great business model doesn't mean much if you don't execute well. So that brings us to round two, leadership and financial strength. When you look at the leadership teams, you see a really stark contrast. The reports show Copart and CarMax have pretty stable management that's been around for a while. But RB Global? It's been a bit of a roller coaster. They've dealt with activist investors, had their CEO and CFO leave unexpectedly, and all of this is happening right when they're trying to pull off a massive, complex merger. That's a lot of risk. And you can see that difference in execution plain as day when you look at the numbers. Let's talk profitability. How much cash are they actually making from what they sell? The gap here is just staggering. Copart is an absolute machine, pulling in a margin of around 45%. RB Global's also very strong at 30%. But then you have CarMax, and because of that asset-heavy model we talked about, their margin is just a tiny fraction of that. I mean, the financial efficiency is on a totally different planet. And that profitability directly impacts their financial health. The reports describe Copart as having a fortress for a balance sheet. It's turning out over $1 billion in free cash and actually has more cash than it does debt. Meanwhile, CarMax and RB Global are running on debt. CarMax needs it for inventory, and RB Global took on a ton for its big merger. This gives Copart a level of stability and flexibility that the other two just can't match. No question, round two goes to Copart as well.
All right, we're now in the final round of our comparison. Growth prospects versus risks. Where's the future money coming from, and what's the biggest thing that could go wrong for each of these companies?
For Copart, the growth story is pretty simple, and it's built on just pure market dominance. In the US, about 4 to 5 million cars get totaled every year.
Copart already handles a whopping 3.5 million of them. So its path forward is clear. Just keep chipping away at the rest of the market and expand overseas.
The other two have a trickier path. CarMax's growth really depends on the economy. They need people to feel good about buying cars and for interest rates to come down. RB Global, on the other hand, has huge potential, but everything, and I mean everything, hinges on making that big merger work. So you've got one steady path and two that are either cyclical or carry a lot of execution risk.
And of course, those different paths come with very different kinds of danger. For Copart, the main risks are external, things like new regulations or big swings in scrap metal prices. For CarMax, it's that triple threat of interest rates, debt, and competition. But the biggest, most immediate risk really belongs to RB Global. The danger for them is internal. Can they actually pull off this massive merger, especially with all the leadership changes?
So, after 3 rounds, what are the real deciding factors here? Let's boil it all down, put up the final scorecard, and see who comes out on top.
Okay, here it is. Copart's biggest strength is that incredibly efficient wide moat business. Its weakness? You could argue it's a bit of a one-trick pony. CarMax has the brand and the market share, but it's really dragged down by those low margins and all that debt. And RB Global? It's the classic story of massive potential versus massive risk. So, when you put it all together, the analysis from these reports points to a pretty clear winner, Copart. It's that killer combination of 3 things: a business model that's incredibly hard to attack, a financial engine that just prints cash, and a stable leadership team that knows what it's doing. While CarMax is a solid company and RB Global has some really exciting potential, based on this analysis, neither one quite matches the all-around strength of Copart.
But this does leave us with one big question for the future. Copart's laser focus on salvaging today's cars is its greatest strength right now. But what happens as we move toward electric and autonomous vehicles? Cars that are basically computers on wheels. Could that very same focus turn into its biggest weakness down the road? Definitely something to think about. Thanks for joining us.